happened to you, if you're listening to this and it's happened to you, then you'll understand what goes on. You're consumed with this sort of universe of grief. And it so crowds your head that you can't find any way around it. And you say, well, you've got to move on. But he would say to you that you actually can't find your way around this sort of inchoate pain.
Good morning. What's going on, guys? Good morning, good afternoon, good evening, good night, wherever you are. We'll get started in a minute. Just give me a quick sound check. Once the sound is good, give people another minute or two. And then get into it. Hope you guys are doing well. Give it another minute. Glad to see the audio's good, video's good. I still haven't figured out why some people say that there's a buzzing noise. Every device I've listened in on, so after posting a stream and listening to it on different phones and different desktops, I have not been able to replicate that buzzing noise that some people talk about, which makes me think that it's not necessarily on my end. Or maybe the way that I'm recording it, that buzzing only comes through based on your settings on your end. But I'm not the right person to talk to about this because I don't know anything about audio or video. Crisp, good, good. Buzzing is gone. Good to know. Good to know. I always wondered if it was some kind of interference, just having a ton of wires and, all that stuff bundled together. Used to hear, but not today. Good to know. Cool. All right, guys. Like I said, good morning, good afternoon, good evening. It's Friday. Originally had this scheduled for last night, but I think it'd be nice to do try to get back into being consistent and doing streams on a set time and day. And I think Friday morning might be a good time to do that. Sort of weekly wrap up. This way we can cover more or less everything. What happened during the week. Weekends, I think, are less significant now, so I don't want to hop on the weekend. I'm not going to try to predict what's going to happen during the week on Monday, so I think Friday's good because we could look back at everything and, yeah, keep it casual. All right, cool. All right, let's get started. As a reminder, none of this is financial advice, strictly for entertainment purposes only. If you guys are not subscribed, go ahead and subscribe to the channel. I do post every time on Twitter that I am going to stream, but in the event that you miss that, if you're subscribed to the channel and you put it on alerts, it's just that, a second line of alerts to be able to watch these streams. And like I said, I haven't been consistent with this. They're few and far between, but if you do miss a stream, I have a great team of editors and video guys that put together recaps and put together shorts. And all that stuff stays on the YouTube. And as a reminder, on the YouTube, there's also the market profile and order flow course that I created, I don't know how many years ago now, and that's completely free. It was free for a while, and then we ported it over to YouTube just so everything is one location. It was easier to access for everybody. Yeah, so we're going to talk about, like I said, we'll just have kind of a casual catch-up. Please feel free to ask any questions. I'll try to get to every question. Keep it serious. No silly stuff. Even though I know this market is quite silly at times. But we're going to talk about BTC. We'll talk about ETH. Look over some of the more popular trends recently. Talk about what's happened in the past week, and hopefully won't keep you long. We'll wrap this up. Okay, so this is VELO right here. I'm probably going to touch on a few things that if you guys have listened to, if you've listened in on any of the spaces during the last week. So I was on a spaces with FEMEX. So shout out to FEMEX. I'm going to mention a few exchanges, obviously. It just happens to be that the spaces were part of FEMEX and SIGNUPS. So you guys know I am part of SIGNUPS. SIGNUPS is a decentralized crypto options exchange that is listing perps hopefully in a week, and I'm really excited for that because they're going to be starting day one with a ton of liquidity. So we've onboarded a bunch of market makers and going to make sure that is good to go from the start. And then FEMEX, that was the spaces I was on 2 days ago. Like I said, I'm kind of going to recap some of the things that I went over in those spaces in case you guys missed them. Those are recorded too. If you guys are interested in any of the exchanges that I mentioned, there's a whole list of them with the current bonuses that are available, which, as you can see, Woo, FEMEX, Bybit, SIGNUPS, Centerpoint, all of that. So a lot of times people want to know what I think in terms of the best exchanges and platforms, and that's as much shilling as you're going to get from me. Those links are available in the LINKTREE link in my bio on Twitter. But like I said, was in a FEMEX spaces. I was in a SIGNUPS spaces yesterday, and if you were in those spaces, there's going to be a bit of redundancy between those spaces and the stream. So the last week, I think this is I was looking at just news sources this morning. Like, what can I use to touch on stories from the last week and important updates and just like current events? And I forgot that VELO actually has this news terminal now, which, if you pay for their paid version, it's breaking news. And I think that's great if you're a news trader. Obviously, news trading has been something that's become really popular over the last 2 years, year and a half. You need your tech it's very important, and I think VELO is probably the best retail-friendly breaking news application that you're going to get without going high-tech and tapping closer to the sources. But this is a platform that now pretty much has everything, and I'm not shilling them. I don't have a link or anything, and I guess it's a free shill. But I've been talking about VELO for a while now. This is a platform that pretty much has everything. So if we're just going to go down the board, we have the news, the futures, options, overall market, take a holistic look, and then TradFi as well. Now VELO actually has a trading terminal too. So again, you guys see me share things like this every time I share a chart on Twitter. I can't get back to all of the comments, and a lot of the times it's, hey, where is this chart from? What is that? Where's that piece of data from? And a lot of times it's from VELO. The one thing that I like about VELO is that you can actually, if you're just going to the futures portion of this, it's going to populate it right away with BTC, but you could do everything up here. So if you're trading WIF, for example, you want all of the relevant futures data for WIF, it's right there. So great platform, but we're going to be focusing on this right here just to talk about some things that have happened in the past week. So consensus, the Wells notice from the SEC, they turn around and sue the SEC, saying the SEC is, as you can say, seeking to declare ETH a security. This is actually great too, because it shows you exactly where that news occurred and how price has been trading since then. Then we have BlackRock. So everyone's kind of familiar with them. I'm assuming what's taken place between consensus and the SEC that was posted yesterday. Excuse me. It's interesting because, and I don't want to spend too much time on this, because Gensler, not too long ago, right, was saying that basically you could be certain that a group of cryptos were not securities, and I think he definitely mentioned Bitcoin. He might have mentioned Doge, but he also mentioned ETH. So it's interesting how there's been a complete pivot on that, but it's very clear, and this is again what I mentioned during the SigNUPS spaces yesterday, and this was before this was filed, and there were some further updates. The war against crypto is still very much taking place. So, higher prices tend to make us forget all of that, but it's still taking place. It's slower. They move slower. I guess in crypto, we're so used to everything happening so fast. Even TradFi participants, whether it's funds, whether it's, just the perception of time in markets, it's much slower compared to crypto, but it's still very much taking place in the background. And this is a battle that I don't think is going to be over anytime soon. So that's something that we should all keep an eye on, because the implications of that are obviously very significant. Next piece of news, BlackRock IBIT posts first day of zero inflows. All right, so this is something that I'm not sure of, but it looks like we actually had two in a row, because that news is a little delayed, obviously, or meaning that news is old. And then it looks like the 24th, so that was for the 24th, so that was zero inflows for that day. And then, so Wednesday, no inflows, and then it looks like yesterday, no inflows as well. So two pretty red days in terms of the ETFs, and we actually had Fidelity with its first red day. If you look at how crypto is trading, or how BTC is trading, and how the S&P is trading, or NASDAQ, they're very close again. So that correlation is, I think it's definitely positive again, but I think it's over 0.5. So I think the correlation coefficient last time I checked for BTC and the S&P was, I think it was a 0.76 or 0.8. And this is as of recently, where this has picked up again. And the market there's a bunch of different woes in the market. There was the conflict in the Middle East that obviously spiked volatility in the short term. And then there's also the implications of either no easing coming down the pipe, so no cuts. So the market looks like it's starting to potentially price in hikes. So they talked about no cuts this year and the potential for hikes to continue. So we're seeing, a little bit of that shakiness in traditional markets begin to spill over into crypto. And I think this is an important reminder, because there seems to be this tendency by certain people here to think that at some point we break free of traditional markets. And it's I've always tried to frame it this way, that when traditional markets are doing well, or at least stable, then crypto kind of has permission to run loose to some degree. But, once things get shaky in traditional markets, that leash has no more slack. So immediately crypto, or BTC, which then in turn spills over into everything else, it's correlated to BTC. Once there's shakiness in traditional markets, there's really no instance where the S&P is going to continue to experience trouble or downside, trend down, get a break in market structure on the high time frame, high time frame for the S&P. There's no instance where, in my opinion, where that, and just historically speaking, empirically, there's been not many instances of that continuing to persist and Bitcoin and crypto shaking that off. I think you could expect that, especially with the introduction of these ETFs, that the markets will become more tightly correlated. And this will just increase over time. And that's my opinion. I think you've seen that actually over the last few years. And I don't think that's changing. I don't think that that's changing as much as people want to think it's going to. Obviously, there's plenty of pockets of outperformance and where they're not correlated. But as soon as shit gets serious again in legacy, it's going to spill over into crypto. So no inflows. It looks like there's a loss of momentum in this market. There are fears from spilling over from traditional markets. A lot of these trades have been riding the idea that we are going into looser financial conditions, right? And now that is beginning to be slightly turned on its head. And, the market, obviously the market can price this in for a little bit, and then it's not like there's no guarantee that we're going to get any hikes, but you could see that right now that is kind of, that's what we're seeing in traditional markets. And again, it's not exactly allowing crypto to flourish, but we're also coming off of multi-month trends and a ton of strength, and it makes sense for this to happen. So even for, I should remind everyone that even for the S&P, break in daily market structure, that's going to happen even in a bull market, right? So you're just going to have to get used to the fact that things don't just continue, as I like to say, monotonically up, where they have no pullbacks and it's just a step up process all the way. So I'd say it's lining up perfectly with the concept of sell in May and go away. So really quick, this is something that's easy to backfit. It's not every single summer, right? It's not every single time that it makes sense for everybody to sell in May and go away. Throughout the summer months, markets tend to be a bit drier, so liquidity dries up a bit, participation is lower. And just think about this from a simple standpoint. Participation is lower for one reason, because people are actually doing things in the summer months rather than focusing or being in the office, focusing on markets around the clock. Not to say that there aren't pockets of outperformance. By all means, this is not something that hasn't been the case every single summer. But on a long time frame, if you have bought in October and sold in April versus buying in April and selling in October, you've done better. So meaning you've done better if you have bought outside of those summer months. And I would say, hey, come back after Labor Day. So I think that traditional markets aren't going to do anything crazy this summer. And because of that, I would expect BTC to kind of more or less range and chop around. But there is a caveat that I mentioned this during I mentioned this during the FEMEX spaces, and I actually mentioned this during the SynQuote spaces as well. This is an election year. And then more importantly, because election years tend to be years that the S&P does well, more importantly, and I should, again, as a reminder also, it's difficult to find years where the S&P doesn't do well. Markets have tended to trend up over time on a long enough timeline. It makes sense to be long, right? So I don't want people to, not everyone's a trader. Not everyone is going to be nimble and shouldn't focus on these things. This isn't for everybody. But election years tend to be years that we see outperformance, and then, or just good performance by the S&P. And then more specifically, populist or election years where we have this kind of, I'd just say like this contention, this divisiveness, those tend to perform even better. So there is that detail that I don't think is something you should just completely overlook, right? This is a summer going into, feels like maybe the last election. And I don't say that completely seriously, but for anyone that's been paying attention to the news and what's been taking place between the two candidates, it's not exactly the most positive situation. So that's something worth noting. But from the way that the S&P is trading right now, from the way BTC is trading right now, I wouldn't expect like some kind of major change. So it looks like some of the people that are or were interested in the ETF are beginning to pull back a little bit right now. So we have that out of the way. All right, so there's one thing I wanted to touch on real quick because obviously meme coins are all the rage. And I mentioned this last week. So there's a link in that bio for Woo. Woo is so many people are. Woo has a huge fan base. So it's a phenomenal exchange, a spot market. They now allow access to tokenized treasuries. It's a futures market, right? So you have everything besides options. But they actually also just listed indexes now. So they have indices. So they have the memes index, the L2 index, and the GM30. So if you're not someone who is a picker and you're not really quite sure what meme to buy or how to get exposure or how to place a trade behind a belief whether or not memes are going to go up or down, continue to do well or do poorly, then this makes it a lot easier. So if you use the link, you'll be able to access this. Woo is a fully KYC'd exchange, so this is not for everybody, but I did want to mention this during the stream because I think that all exchanges should do this, to be honest. Like, forget about just Woo. I think all exchanges should have some kind of index products like we see in traditional markets. It's a little mind-boggling that we don't have one now that is doing a ton of volume and is more broadly used. So I wanted to mention that. Shout out to Woo. Those guys are awesome, by the way. All right, so we'll go into BTC first, right? Does anyone? Let me just look at the chat real quick because I kind of went on a little bit of a ramble there. Get rid of some of this stuff. Give you guys a second to catch up. So as I mentioned, give that a second actually. Yeah, feel free to ask questions. I'll look back at it in a second. So my idea for BTC for the summer isn't something, there's no grand plans for me. I'm not going to change much. I'm not selling my spot. We're still within, so we're about to close out the monthly in just a few days. And we have this inside month structure. So we're looking at a weekly chart. And this is a good way to look at everything, by the way, guys. If you want a big picture view, sort of top-down view of the market, it's good to have things organized in this way because it's very easy to spot. I think it's better, rather, let me put it this way. I think it's better to do something like this where you have a template like this versus trying to switch between timeframes like this, right? It's easy to miss something when you are doing something like this, when you're like, okay, I'm going to look at the weekly right now. I'm going to look at the daily and then I'm going to refine entries on some kind of lower time frame, depending on what kind of trader you are, obviously, right? If you're a scalper, you might not need any of these things. You still need some kind of, I think you want to have an idea of just higher time frame context and those significant inflection points. But for most people, I think you're better off organizing things in this manner. So we have the weekly chart, the daily, the 4-hour, and the 30-minute. As I mentioned, for anyone who's confused, where is your very low time frame chart? The market has been in conditions as of the last 2 quarters, 3 quarters that make, in my opinion, very low time frame trading. It's something that I could do without. So I would rather zoom out a bit more and get back into the low time frame hustle when things when there's some kind of major change. And right now it still favors, in my opinion, your intra-week, intra-monthly swing trading and up and position trading, trading all the way up to monthly and longer term charts rather than focusing too much on the low time frames. Obviously, that doesn't mean there's no trades that take place in the very low time frames. In my opinion, though, how I want to spend my energy right now, I just think I want to leave that off the table. So my lowest time frame chart lately has been either the 30-minute or the 1-hour chart. And this is more or less to just define entries in a bit more of a granular way. So BTC, as I said, we have this inside monthly setup. So what that means is, and you can see the profiles for the monthlies right there. So you're looking at a monthly profile right here, a monthly profile right there. And as you can see, the month of April is fully encapsulated by the month of March. So this, if you could take anything from this, it just means the market is more or less in balance. So it's not imbalanced, it's in balance. So fair value right now happens to be right around $67,000. So even though we've been trading, in a downtrend just from a closing standpoint for the last month, meaning we closed the week here, the week here, the week here, and the week here lower, lower, lower. It isn't the case that we really changed anything big picture, right? The market is still trading between a very well-defined range, and you get a better idea of that when you see something like the daily chart. If you're going to go based on daily high, highest close, daily lowest close within the structure, it's not the case that anything has majorly changed. When you're looking at things from through a different lens, you might be able to identify, yeah, it looks like momentum is peeled off. There's been a change in maybe the aggressiveness of the futures market. Spot market has been kind of drying up, but for all intents and purposes, we're still trading in more or less the same structure we've been in going back to the beginning of March. So anyone in position here hasn't really been pushed off sides much. We ended up taking these lows, but we haven't really seen anything take place, right? We're trading within a well-defined range. There's plenty of great trading opportunities, again, that you could hold for days, but big picture view, this is high time frame chop. And I say high time frame chop because a lot of people say chop, but chop kind of gives you the idea, or rather there's the implication that chop means it's untradeable, and that's not the case at all. Probably shouldn't even use the word chop. But I think that we're going to see this continue. Like, I think that as long as we're within this range, there's no pressure on really anybody who's been involved. So, whether you bought slightly higher than here or you're hedged from slightly lower than here, you're within the structure. You're close to fair value in terms of how much, the high volume point within the structure, and no one is really that wrong yet. So, if the market was trading well above 75 or 73 rather, anyone who shorted clearly is starting to bite their nails. And if the market is trading back below 60K, then anyone who is longed up here is really beginning to second guess himself. So until we see that, I'm not going to try to predict much other than this trend will continue sideways. And I think you might even get something that, does something similar to what we did after the last halving, which was move sideways for like 70 days. So I think last halving, it might have been 70, 75 days. So if we just look at where we are with respect to this more recent halving, and if you're going to look at it and look at that prior instance as some kind of proxy for what we can anticipate, then something that does this, I don't know why I just deleted that, something that does this is something that we've experienced before, right? Where it builds up, and the last time this happened, it funneled very tightly. So you built up this volatility funnel where you're just ping-ponging, and then you're accumulating stops on both sides, right? I'm going to short, I'm going to long, I'm going to place my stop here, I'm wrong here, I'm wrong here. As you're tightening up, you're confining that region of liquidity, either to buy in terms of covering shorts, or to sell in terms of closing out long positions. You're winding that up, right? And you're building that potential energy, and that is something we did previously, where we just built up all of that energy, and then when we finally started breaking out of that triangle, that next move was significant. We marked up, we ranged longer, and then we actually dropped back down. So last halving, we moved sideways for quite a while, and I would just anticipate that, hey, it's kind of dovetailing nicely with the months we're going into and how the markets have tended to perform throughout those months, minus obviously a couple instances where there's been, again, multi-week trends. But big picture, not much, in my opinion, going to change for BTC. So not much lower, not much higher. One thing that I like to reference is what some of the more significant options positioning is telling. I think the options market is to some degree a filter. I don't want to say smart money. I wouldn't say just more money. The concept of smart money is kind of silly, right? We've seen plenty of people that, or funds, right, that don't outperform retail, right, that make the same stupid mistakes that blow up, whether it's, esteemed traders in this space, or again, funds and more institutional types. But the options market, for some reason, I think has been, and I do think maybe it's because the product is a bit more sophisticated. Maybe it is the truth. There is some kind of smarter money that exists through there rather than punting around in futures. But it has to some degree telegraphed. It's performed well in the past. Put it that way. I don't want to say it as if it's always been the case. When we've seen very significant block trades come through, it has been accurate in the past in more or less not predicting, but giving us some kind of insight as to what to expect for the market over the coming months, whether it's a ton of calls lifted in the short term, whether it's 30 to 60 day or the opposite. In this case, what we're seeing is there's a decent amount of premium, right? So it's not just bullshit positioning. Come through Paradigm, you can look at their block trades. Basically, selling 75K calls. So we're talking, go to this real quick and point this out real quick. This was what I shared earlier. This is the at the money constant maturity. So this is implied volatility. We're looking at 30, 60, 90 day, and you can see this trending down. And I kind of anticipate this is going to continue to trend down. But we'll go to what I was just talking about, Paradigm's block sniffer. And we'll just sort this by the premium so you can see which one. Is this going to load? It's taking a second to load. So there is about $9 million in premium put up, and the trades were pretty close. Here we go. This is sell. This more recent one is sell. The 90K calls by 30K calls. This is that's a call. Well, that's a call spread. What are we talking about? Where is the buy 100K? This is since updated actually, so maybe that positioning has changed. Either way, where is it? Let's see. Oh, do we have more here? Where are the you have to stretch this out. Active only. It was sell 75K calls, the total 9 million premium, and buy. It was buy 100K or it was buy 80K. I'll have to figure this out. Wait, was this buy this one? Here's one of them. Okay, so there's one of them. That's the $5 million premium one. So that's buy December 80K. Okay, so it was 80K calls. Sell June 75K calls. There was another one too. But just the bet is that the market isn't making a new all-time high over the summer, or at least using that call to finance that, using that short call to finance that longer exposure. Get out of this because I couldn't find that right away, and it fucked up my vibe. So flat summer, but not necessarily so flat that it's untradeable. But for anyone who is long spot, I think that there's not much reason to change anything yet. If we look at the daily, one of the things that I like to look at is the 20-period moving average. So as you can tell, we lost it, we retested it, nothing much happening. Market's moving sideways, the averages are going to flatten out. That makes sense. From a weekly standpoint, we're trending down. And I think it wouldn't be abnormal for us to actually continue to have this kind of downward drift rather than maybe move sideways. So prepare to lose 60, right? I think the idea is prepare to lose 60, even testing this yearly VWAP, so 57K, not something that I think is out of the question. And I don't think that even warrants much of a change. So again, I'm not changing. In terms of spot positioning, I don't see a real reason to worry, especially because we are going to a period where I think it's just going to be, more or less inactive minus a couple rotations. I'm sure there'll be manufactured, the best way I could put it, manufactured rotations that take place in this market. If we look at just the whole market right now, it looks positive, right? I mean, if we look at funding, everything is cooled down. Again, volatility is cooling down, though. We had a major wipe in open interest, so there is a open interest indicator that's available now for TradingView. Leviathan created it. He has a great suite of indicators. I don't have it up. But open interest as a whole came off quite a bit. So open interest, right? We'll use the aggregated. Hold on one sec. Should have had this done already. We had a big open interest wipe, right? Which is something that you normally want to buy, right? So after that wipe, there's been plenty of bounces in alts, but we haven't really seen the market show much aggressiveness since then. So back up, zoom out rather. Here we go. So we had a very significant open interest wipe in BTC. If we look at global open interest, same thing. So you can tell I haven't streamed in a bit because I don't have everything set up. So global open interest down from 48 billion down to 36. So $12 billion wipe. So again, when this happens in the short term, I always want to be a buyer when that happens. If we go all the way back to, and this is the chart I meant to pull up before. If we go all the way back to where that came off, so this is aggregated open interest, and there's not, so this doesn't include all of the markets. So I don't think that this Leviathan version includes Bybit. It definitely doesn't include OKX. I think it's just Binance and maybe one other. Just looking at the totals, it's at 4.7 billion. So we had a major wipe. Since then, we've had quite significant bounces though. So if we use this, if we use that first wipe as a proxy, so if we go back to April 13th, whether we use that or we use the more recent drop, you could see that there's been plenty of memes that have done well. So Pepe, WIF, both of those up significantly. More recently, WIF has been chopping up and down. It'd be like under 3, 320, under 3. Haven't been focusing on it too much though, I have to admit. AI up, you know, these things are up within reason. I think they're up as you would expect off of a low like this after a wipe like this. I don't know if this is necessarily where you want to add everything back, right? If you didn't add already, I think this is just the result of kind of wiping the book and seeing things fill out that inefficiency as you normally would. So after a wipe like this, you know, it's in the short term, it always pays to look for the long opportunity because there's not as much resistance above because you've taken out that pressure. So there is a little bit of a vacuum. Since then, we've seen though that Coinbase has been trading at a discount consistently to, on and off more consistently to Binance than anything else. So Coinbase trading below Binance, and this is this red right here. So this is a premium discount indicator. It's very easy to use. It's on TradingView. You just input the pairs you want to compare. And this is indicating that Coinbase is trading below Binance right now. That's nothing major, but we have seen during the periods of, you know, Bitcoin trending very hard when there's a spot, you know, a ton of demand in the spot market, we see Coinbase lifting quite aggressively. So this is always something worth paying attention to that Binance and Coinbase premium and discount. So plenty of things bounced since then. But like I said, I don't think that this is, you know, I don't think this is over for alts, meaning in terms of if Bitcoin is going to continue to correct. I think you'll have pockets of outperformance from alts. But I did say maybe 2 weeks ago now, I think the low lows will be established over the summer. So if we're looking at, I don't want to look at ETH, but look at Solana, for example. To me, it looks like Solana has further downside. So we look at Solana on the monthly. It's also the case that we have an inside month. So this kind of balanced setup does offer, you know, there's plenty of trades that I'll take on the daily time frame, even on lower time frames based on this inside balance setup. And I've gone over this in prior videos, and I feel like going through the entire thing again. Feel free to reach out to me, and I'll gladly give you my input on that. It's basically the high and low as a threshold for a pretty mechanical trade. Or in this case, what I think with BTC will be a reversion trade. So if we look at Bitcoin's, I guess it's worth going over this. I don't want to be a dick and say I don't want to go over it. So we have Bitcoin's inside month setup, right? So prior month low, prior month high. If we close out like this, we're looking at this month's low and this month's high as a trigger point. So it's either a point where we'll look for an immediate, you know, in this case, so if I had to guess where I'm looking for a short opportunity, or the lows where I'm looking for a long opportunity, anticipating that we'll trap more sellers at the low and trap more buyers at the high. In other instances, this is just for example, I don't want to put too much weight in it. That's my opinion of what's going to happen, but this is a good trade location to look for a contextual shift. So to look for a breakout opportunity or to look for a breakdown opportunity as well. All right, so where was I? Let me look through the chat because let me answer some questions before I just continue to kind of drum on. So I think that we're going to continue to see dispersion in this market. It's been the case. It's been the way the environment has been now for the last, I don't want to say the market environment. I just think it's this market now. I think that we're going to continue to see dispersion. I think it's a sign of a market that's becoming a little bit more efficient, that is maturing. And this is something that it's the way traditional markets are, right? And alts, alts that have been doing nothing for a long time, should they continue to be bid, or if there's nothing there, should they continue to catch a bid when Bitcoin is, what's the best way to put this? Because I don't want to say that they're not going to. I think it makes sense to be a picker in this market. So I think it makes sense to be a picker, try to be a picker, and not just be someone who kind of passively index across the board, because that's worked out in the past. So in the past, it's worked out that you kind of just spray and pray and everything gets lifted. And then when there's a rising tide, again, all boats get lifted. But I think you're going to see just this continued pockets of outperformance and dispersion that we've had now for feels like the last year. And, unless there's the way that doesn't happen is if we have a new major retail rush, like, a whole massive group of people that aren't aware of crypto discover it all at once and they come into the market and just start lifting everything. I don't think that's going to be the case. And that's, when you have a bunch of new retail, that indiscriminate buying, price insensitive, don't even know what's going on. Then you see things that have been dead and long gone get lifted in a way that doesn't make sense. And I don't think we're looking at that. I don't want to say it doesn't make sense, but there's things that have a very low unit cost, and retail looks at that as, something that's cheap, and you see things get lifted that are just, better about, that are dead projects or don't deserve to catch a bid, but suddenly they're just ripping 100% in the middle of the day. And, we saw that last bull market before it. I don't think you're going to see that anytime soon. So I think it makes sense to be a picker. I think the dispersion will remain. And you just have to be better at your job if you're a trader. I think this market's becoming more like traditional markets. So I think it will, now that we have BTC with an ETF, hopefully we'll have that sort of passive bid over time. Maybe that'll mute volatility to the downside to some degree. I don't want to say that and be like anyone who is saying that, now big dips are done, because that's, we've seen what happens at traditional markets when all correlations go to 1. Right. And, during COVID and during black swans, like, that's never a case that that Bitcoin is never going to experience another 50% drawdown. I think it's dangerous when we start hearing people say, we're in this new paradigm, but yeah, there is some credence to that, though, or some merit to that. If we consider that Bitcoin is going to be added to traditional portfolios, and we have these, corporate types and long-only asset managers and pension funds, if they're all coming, which they're not necessarily here yet, the sovereign wealth funds, then that adds a different type of buyer to this market that does support it in a different way. The way that value investors step in when there's pullbacks in stocks, we don't have that yet in crypto. There's a whole bunch of buyers from, again, I've gone over this, from like 0.1% all the way down to 20% in legacy markets, right? If Apple drops 20%, who isn't buying some Apple? I love Apple product. Like, just thinking in terms of how people would think. All my products are Apple products. Apple's not going anywhere anytime soon. Apple is an incredible company. Like, this is a buying opportunity of a lifetime to buy Apple at a 20% discount out of nowhere. Okay. That exists in many different ways in legacy markets. It doesn't really exist in crypto, maybe aside from, there are people that think like that, but funds don't think like that. So, at least with alts. All right, where was I? Getting a little lost. WIF is still riding the struggle bus. So, what did I say? The June or July lows to buy in alts. I said that before we had this major dump. So I was anticipating it would take longer for us to correct. So it's possible that this was the low, right? and maybe we just continue to chop around, but I definitely want to add more whiff exposure. I don't think meme coins are done, but I think it's clear that something has changed, right? There's a change in the air, right? The excitement, the sort of fever pitch has passed with meme coins, and I think that whiff has kind of cemented its place in this market. Someone, very great job to anyone who put the bull. Great job to whoever put the hat on the bull. Great job to Ansem, right? Because this is definitely something that I think is going to be around like Doge. I think Pepe, the same thing, but everything popping off the way it was a month ago. Can you say honestly that everything is the way it was a month, 2 months ago? I think not. We have POPCAT. Speaking of popping. See, POPCAT is interesting because there's a lot of people now looking at this, and you start to see this anytime that people are trying to get you to buy their bags, sharing the charts of, or rather the market caps of various coins in a sector. And you have, whether this is done in AI for a new AI pair that's trying to be lifted, or in this case, POPCAT. I saw people sharing the Doge market cap, the WIF market cap, the Pepe market cap, and there was one other, I forgot which it was. And then the contrast of those compared to POPCAT's market cap, right? And it was like 20 billion, 3 billion, whatever the others were, billions, right? And then POPCAT, 500 million. And the idea is that that gap is going to be closed, and it'll be closed by POPCAT obviously continue to go up. I actually like POPCAT. So I to be completely honest, I want a position in POPCAT. One, for kind of that same reason, because you're playing the crowd, right? So it's not that I think that POPCAT deserves that valuation, but I think there are enough people that think that that's going to close that are going to be buying on behalf of that. And honestly, and just to be completely transparent, not that it's not going to matter after I finish the sentence, I don't even have a position in POPCAT. So I don't have a position in POPCAT yet. I looked at it yesterday, and this just happens in my life now. I was outside, and I'm on my laptop, and I'm like, oh, I don't have my Solana wallet on here. So I'll just buy some POPCAT when I go inside. And then I never bought some POPCAT. And obviously it's up 20% today now, right? So, or 65%. So shame on me. But the reason why I like POPCAT is because I'm actually familiar with POPCAT. Not like is this POPCAT, this image? I'm familiar with this image. And you know why I'm familiar with it? Because I think In Silico used to share a meme or a video of this cat. I forgot what context it was in or what it was for. But immediately the recognition of this, I don't know, it was an old post, so there was some kind of like nostalgia to it of like earlier CT days. Forget everything I'm saying about all that, right? That's something that was for me, and I'm thinking that's how I'm thinking. But the point is, I want to buy this for a couple reasons, and I haven't got around to it yet. So I'll probably build a position in this. It seems like it's one of those things now where the market is one, it's hot, and then two, I just think it's going to be one of those things that has legs for a couple of reasons. We haven't had, there's been cats that have outperformed. This sounds so fucking stupid. This market's so dumb. There's been cats that have outperformed, but we don't have a cat token yet that's set the way we have Doge, right? I'll even say the way we have WIF. Okay, I'll put WIF in the same light of Doge, even though they're vastly different in terms of market cap and how long they've been around. And Doge is like as crypto as you're gonna get. Like Doge speaks to the ethos of crypto. Doge actually is good. Doge could have an ETF, right? Doge is not a security, right? It's very clear that Doge is pure play on decentralization and being just like I think it's a good barometer of overall risk. So I don't know what kind of ETF you want to package, but I think that would be something that would be, I wouldn't be surprised to see a Doge ETF like a decade from now. Who knows, maybe even sooner. Either way, I digress. There's no cat that's, that has the number one spot. And I don't mean from a market cap standpoint. My point is that there's no immediate cat that comes to mind for everybody. Outside this market, if I say, you know what Dogecoin is? For people that don't care about crypto anymore, they do. Right? Oh, hey, or even if I said, if I asked someone if they had any familiarity with crypto, whether they were a last cycle person or whether they're, slightly exposed, if I asked them, what dog coin what dog coin comes to mind when they think crypto, everyone's going to say Doge. So my point is, it's ubiquitous. It's reached kind of retail saturation to some degree. It's cemented its place in the annals of crypto history and future. So there's nothing for a cat yet, and I'm surprised because cat, I don't want to say cat culture, but cat, like this, again, this conversation is so silly to me, but like the cat obsession by people on the internet, cat memes, silly cat videos, has been massive, right? So anyway, yeah. The vibe has calmed down. A bit. Do I think this bull run runs shorter than others? Yeah, so here's something good to touch on. I think that it's going to be different moving forward. I think Bitcoin has separated. I want to say I think Bitcoin has separated itself from the rest of the market, from the altcoin market. So it's very clear Bitcoin is in a different arena now. Now, I think that when Bitcoin benefits, it's still going to lead to speculation in the altcoin market, outperformance beyond Bitcoin's performance. But I do think that we're looking at different markets almost. I don't know how to put it, but with an ETF, Bitcoin is now, it's just now more of it is a institutionally accepted product or mainstream accepted product. Whereas alts are still not, So I think it's possible that you see much larger periods of dispersion where alts kind of just die out and, or really tightens up, and the pockets of outperformance are very specific, and Bitcoin just kind of trades sort of like the S&P, Nothing crazy to the downside, nothing crazy to the upside. And it doesn't mean never, but, if you look at alts, it's much different how they trade. I mean, listen, do I think POPCAT will correct significantly? Yeah, it's an altcoin. Like, it's a shitcoin at the end of the day. So if you buy these, you have to anticipate that at some point you're going to see your portfolio with this position cut in half and then, bounce again completely the next day. So, yeah, I mean, it's just altcoins in general. No, I don't think of it. I don't know if memes have any utility. I think, there might be a case for memes actually being a sign of a longer term top in civilization. And I'm somewhat, I'm mostly not serious, but it's just this market has resorted to very non-serious things. And I think it's a sign that there isn't much substance here yet besides some primitives. But, nothing really, there's not much to show for what's taking place here besides the illusion of things taking place. Does that make sense? We're always building something for something that's coming for a group of people that are going to be demanding this in the future. But right now it's not the case. So it's a long road though. But yeah, I think memes are great trading opportunities. But, they're just not in the same category when you look at like Bitcoin and ETH and you look at just what memes are doing. I think it represents two different things, obviously. I mean, there were meme stocks too, so this shouldn't be a surprise. Like we all knew there's been plenty of meme stocks that have traded well beyond what they should be valued at, and it just was a representation of just human greed and animal spirits. Yeah, I have a long-term crypto portfolio. Yeah, I have, most of my portfolio is in Bitcoin, and then I have select alt exposure. but majority of it's in Bitcoin. And there's a lot of Bitcoin now that I just probably won't be selling for the next, I would say, decade. I'm just confident that Bitcoin's going to continue to go up, and it doesn't make sense for me to sell that spot Bitcoin anymore. And then, you know, I do a lot of tactical trading around core positions with futures. So, but now, like, a lot of things changed since I had a daughter, and I'm thinking differently now, and I don't want to try to be as nimble with my entire portfolio as maybe I was like long time ago. But the reason why it's in Bitcoin is because I trust Bitcoin more than anything will be around. I trust, listen, to be honest, I trust Bitcoin and Doge to be around basically more than anything else. I trust Doge to be around more than I trust Ethereum to be around. As silly as that sounds. So ETHENA. You know, with funding rates being where they're at right now, obviously ETHENA isn't in trouble, but if they remain flat and go negative, it's a different story. That just gets wound down. Doesn't have to mean there's some kind of major Luna 2.0. But if you're just looking at it from a market structure standpoint, it's in a downtrend. It's a new coin too. So with new coins, I always talk about how it is, I want to say it's a simple trade in that, especially during, you know, depending on what time in the cycle the coin comes out, or what kind of period the coin comes into, meaning is it a period where people are just buying into everything, or is it a period of calm, volatility high or low? There were pairs that you could see benefited from launching at the right time, like Celestia, like Sue, had major run-ups. And then Athena, which definitely came later in this portion of the cycle, in this period we're in within a larger cycle, and has clearly not benefited from it from a price standpoint. You know, talking about people that bought in upon exchange listings. There's obviously people that are up tremendously, which are the people that you're selling, they're happy to sell into these moves because they're already up tremendously. So you have to remember that. But with new pairs like this, the one thing I always say is that they give you really easy trades. So a lot of the times, the best entries have been new listing finds a base, whether it starts new, drops, bases out, or whether it's up and it's favoring. You look at this, like, let's say you're looking at this as a range, and you're low, you're mid, you're high, and it's favoring the upper level of this range. If it's very clean, sort of like, you know, don't have to imagine. Go back and look at Celestia early on. Brief range, very tight, and then had a breakout, and that's it. Just get behind the breakout, ride the comet. This is doing the opposite. This is doing what I say I avoid. This is doing what I think you should avoid getting involved. What the fuck's going on with my language right now? How this is trading right now, to me, is not bullish, right? I don't see a long signal anytime soon. So for me, I would rather see, I didn't have enough coffee this morning. I woke up really early because my daughter was standing in her crib at like 4:45 a.m. just waiting for me to come in. This is downtrending, right? If this does something like this and then begins to retake local market structure, then I think those easy trades are back on the table, especially because it's a new pair. But as long as it continues to favor the low portion of this range and mark down, I think you could see this continue where it just chops down lower. And then I need to see a major shift in market structure. So, you know, for these, it's not, I don't really require too much when it comes to that. Like, there was a really easy one that I had shared this not too long ago. So Sue was a great example, but maybe it was Say. Yeah, it was this. And look, this is October, and this is August, so we're talking about 2 months. And then if we look at, you know, Athena, we're kind of, where is it? You know, we're not even a month into it. So my point is, don't forget how Say traded, right? Like I said, didn't give you that bullish setup right away. This instead continued to chop down, but it gave you something clean to get behind. And that clean thing to get behind was this trend line, sort of governing any upside on the way down. So chopping down, very clean market structure in one respect. And once that changed, it made sense to get behind that change. And sometimes that market structure is clean sideways, right? Or in this case, clean chopping down. But there are some obvious levels that are, again, some really obvious levels of market structure, or in the pace rather of this downtrend, that are keeping a lid on this. And once that changes, I think it's good to get involved in new coins when they do that. So for, you know, ETHENA, maybe it does that, right? Sorry, I'm keep getting rid of the drawing tool. Maybe it continues to chop down all the way to who knows. But if it gives you something clean, that's really all you can ask for. You know, and this maybe dovetails nicely with going through the summer like that. And then if we're around September and this thing has put in a longer base, then yeah, look to get very long this. What do I think about Ondo year to date? This is the best chart I could give for that. Or no, what do I think about Ondo? Sorry, and then I just pulled up the year to date chart. I'm bullish on RWAs, and I think there's a legitimate use case there. I don't think maybe the market is going to highlight the most legitimate things that are going to happen. They're just going to look to push that narrative, and you should still get behind that either way. But Ondo is, again, you have Larry Fink talking about real world assets, and then you have Ondo with BlackRock on their webpage. And my point isn't saying that BlackRock is saying to buy Ondo or that they're bullish on Ondo, but my point is other people are going to really easily arrive to that incorrect correction, right? Or that assumption that Ondo is, you know, the BlackRock RWA play, or it's related to BlackRock, right? So I think it's benefited from anything Larry Fink has said because of that also. And I think that you want to mark this market out up to this point, because it's been very clear, as by the sectors that have done really well. So, and what I think is likely to continue to do well. So it is, and I think it's going to change overnight. And I don't think it's just going to change the cycle period. I think there's a lot of people buying, anticipating that AI is going to change the world. So AI sector is going to do well, even if we can't even describe what crypto AI is. We know that a lot of it's just bullshit, and it's just a lot of tokens that are now saying that they have an AI project. It doesn't matter. Those will still do really well. I don't want to say it doesn't matter, like you should approach your investment portfolio like that, because that's bullshit. But the point is, we know how this market works. We know how these narratives are manufactured, kindled, and a lot of times based on nothing. But it is the case that AI is going to change the world. I think the AI bubble is going to be the largest bubble, and I don't even think we're there yet. But that means, though, you could be too early to something. So AI, memes, obviously, and there is some nihilism to memes, but it is what it is. Like, memes are very popular right now, and the people that are buying right now, they're the people that we have here that are going to be, you know, they're the people right now pressing the buttons. Like, we don't have any new people here right now expressing opinions differently against that in terms of their buying and selling behavior. So until those flows change, like, expect them to remain, you know, they'll go through periods of corrections, obviously, but I anticipate them to pick up again. That's what I mean. And then real world assets. So I think that you want to identify the leaders in those sectors. And if I'm looking at memes, I'm looking at Doge, I'm looking at Pepe. Maybe it'll be POPCAT. Like I said, don't have a position in POPCAT though. If I'm looking at AI, I like Render, I like FET, I like Near. I actually like WorldCoin. And then you have RWAs. I like Ondo, I like Maple too. So yeah. So volume profiles, I mean, just very basic. And then we'll wrap the stream up, guys. Here you go. So this is just a profile of all of the volume that was transacted, right? So you're going to be building, obviously, higher volume nodes, periods of consolidations like this, where a lot of trading has accumulated, a lot of trading has taken place, where there's been a bunch of participation. And then these are low volume nodes where the market put in a very imbalanced move through, wasn't a lot of participation, very one-sided. And, you know, you could use, there's a lot of different ways that people use these. Some people trade the ledges, look to trade at the gaps, at the threshold of where the high volume node ends into the low volume region. Some people use these as support and resistance. I just like to remember that this is an area where the market got involved. It could be an area where there are still positions left over. So if we return to, we could see a response. The low volume areas, a lot of times I'll look at them as, you know, if we re-accept into a low volume area as an area where we'll probably fill that out over time, but move through pretty quickly on the first go. So if we accept into a low volume region, so for example, let's just use this one for this example. So this low volume region, if the market accepts into this level, it's never accepted in there before, meaning it moved quickly through there. There wasn't really much two-way trade. If we accept into that, I think that there's not much that stands in the way of us moving down to lower prices where volume began to pick up again. Now, so there's not much friction, but what tends to happen is market might move quickly through here, but then ends up trading and filling this level out. Okay, so this looks to be the next area or range potentially that sets up. And I just use it as a threshold, right? So where it drops off, right, where it picks up again, rather. As, you know, the best way that I could put it is, imagine that this is some kind of like topographic map flipped, right? And let's say that this is where our ball is, right? On the edges, it's more like this. There's something there. So the market is good up here. The ball is okay up here. With not much resistance, it's not going to go over the edge. But once it goes over an edge, what's it likely to do? Roll down to the bottom, right? And what is a ball really likely to do? Or, you know, any kind of object like that? Probably going to go back and forth a little bit, right? Builds up on the way down, goes to the other side, comes back before settling and finding fair value again. So I mean, this is not a lesson on volume profiles. It's just a profile of where the volume was transacted. Now there are profiles based on time too. So if you're using a TPO, it a lot of times is going to look very similar to the volume profile, but it's just based on where the market spent time. So from that, you might be able to glean periods where the market spent a lot of time, but a lot of volume wasn't actually transacted, and the inverse as well. The POC is basically fair value, so that's where most volume was transacted. So I like to think of that level as fair value, meaning, you know, that's where there's really not much to be gleaned from that level, because that's where most people had committed. You know, there's different ways to use it though. Like for example, if the fair value is if the POC we're building volume at the lows, you know, I want to see that we're building volume and then continuously stepping up. I don't want to see cases where, in the case of a bull market, right, or a trend that's continuing, I don't want to see instances where we're building the POC at the high and then the market is coming off and the open interest hasn't come off, and we have maybe a setup where the market is top heavy. In a correction over time, I want to see, right, that as we're moving sideways, the POC is beginning to base out and the market is holding the POC. So let's say for the case of this structure, POC has transitioned. Wait one sec. So from the beginning, POC was at 67, transitioning still 68, 67. Hasn't really changed much. You can see a high volume node here. This is the highest volume node. But, you know, if the market is going to continue to trade sideways lower like it did last halving, right? Let's say it chops around lower. What you'll see is that POC will move down. Now, if we've done that and then we're starting to trade higher levels again, and we're trading above where most of the volume came in, then I'm going to say that that looks bullish, right? Because at that point, anyone who got short there, or anyone who sold there and is responsible for that volume on that side of things is wrong, right? And maybe we've accumulated a good amount of position there. Maybe you have some other evidence in open interest as well. And you're trading above the base that you're building. So you're building a base, right? So you want to see as the market moves up that it builds healthy bases, right, before continuing to move up. What you don't want is the market continue to narrow out. But there's videos on this on the YouTube that go into much more detail, and this is a very surface level explanation of it. All right, guys, I'm going to head out. It's 10 o'clock. Thank you for tuning in. If you're interested in any of the things that I shared, reach out to me if I haven't. Reach out to me if you're, have any questions about them, rather. But there's also some links in my bio, too, as well. And I'll see you when I see you. I don't know exactly when that be. When that will be. I haven't come up with a schedule, but we'll try to do this more consistently.